Hey, Mike Swanson here. Funny thing happened today. The Dow fell just about 80 points, but despite that, almost every position in my portfolio went up. The reason why is because a lot of it's mostly invested in commodity-related stocks and European stocks, and that stuff went up today. In fact, it appears that commodities and gold stocks are in the process of breaking out, and what we've got to ask ourselves, are other markets going to follow? Now, here's the S&P 500. You look at that, and it kind of don't look so hot, right? It's hard to think that looks really bullish or really that exciting to want to buy or get into, because it's gone up for like 2 months now, and today it went above 1420, pretty much almost to a new high, and then closed on a low. Actually went in the red, and that's the kind of action that's got a lot of people wondering: is the market about to pull back, or it's just they got bad thoughts in their mind because they're looking at this. Well, that's what everyone's doing. If you don't look at that, but instead look at this, you get really excited. This is the Commodity Research Bureau Index, and it appears to have broken out today. And I think it's about to start a new bull market, or it's actually right now in the process of doing it. Look at it. It's been in a downtrend for over a year. You can see the downtrend resistance line. It bounced back up to that resistance line about a month ago, and it's consolidated, formed a base, and today it did something very significant. While the rest of the stock market, the S&P 500, dropped, it was up 1% and broke above that base. It broke above the resistance area of the base that's been forming now for over a month, and that should be a signal that's going to go up. And if it goes up from here, breaking that resistance line, you're talking about a new bull run. You're talking about the end of the downtrend that's been keeping commodities depressed now for a year and a half. And look, here's GCC. This is the ETF that I bought last week and told you about it, and it had a gain today in my portfolio, you saw a few moments ago, and it closely tracks the CRB index. And what do you know? It closed above 30 today, the close above the same sort of resistance line. And one thing I want you to notice here is that the 200-day, the 150-day, and the 50-day moving average for GCC and the CRB index are all starting to point together. And that's something that you see happen as the transition phase between bear and bull market nears an end. These moving averages tend to all start to point together. So you can look for markets and stocks and so forth that display that same characteristic to try to find things that are about to end a stage one consolidation phase and begin a new bull market. And if you invest in those type of things and hold them for a while, you make a ton of money because you're investing at the start of bull markets. Here's gold. In gold too, I bought GLD last week, the gold ETF, right? Well, here's the price of gold. It's turned up today too. Gold broke a resistance trend line that's kept it down too since this spring. Closed above it today and should spark further buying in gold. And as I suggested over the weekend to power investors, I thought commodities were going to start to break out into new bull markets first, ahead of Europe and emerging markets doing it. And today seems to be the start of that process. Are other markets to follow then? Well, what I believe has happened over the past year is what we're seeing in lots of markets. This is EEM, the Emerging Markets ETF, is a big basing process, something like a double bottom or reverse head and shoulders pattern, and we should be forming the right side of that shoulder. We're not in a position to break out tomorrow or maybe even next week for these markets, but I think in a month or two they'll follow commodities and break out too and start new bull markets of their own. Here's the type of bottoming formation. Say, let's take a look at EWG, the Germany ETF. Okay, you saw, if you want to think about a reverse head and shoulders pattern, you saw the left side of the shoulders form last fall, and if this pattern completes, it took about 2 months for this to form here, and then it dropped back down. It'll take about 2 months for it to form here too. But instead of dropping back down, it should break out to the upside. And a breakout here will mean the start of a new bull market for Germany. And European stocks look about the same, just across the board. Markets in Europe look the same. Markets in Asia look the same, as you saw for the EM ETF. What doesn't look the same is the S&P 500. And one thing, if you go back to last wintertime, November, December, January, I was making a big note of the fact that the S&P 500 was outperforming the rest of the world. Okay, and that was something that was different from what we saw from like 2008 to 2011. We saw that back in those years, we saw everything go up together and everything pretty much fall together. If you remember, people were talking about risk on and risk off, meaning that everything would go up and then everything would go down at the same time. That started to change last year as the S&P 500 continued higher while just about everything else went lower, right? Well, I was thinking that what would end up happening was these other markets would end up dragging the S&P 500 down with them, and once that happened, we'd see a final bottom around the world and a great buying opportunity. That's what I was forecasting at the beginning of the year. Well, as last month ended, my thinking took a radical shift because I was identifying these bottoming formations in markets all over the place and potential breakouts of commodities. So my notion of the S&P has to correct before we start buying and investing, I abandoned that, because what I see now is new bull markets starting right now in gold and commodities that everyone is missing. No one's talking about this on television because everyone's focused on the S&P 500 and how it dropped today. And oh my gosh, that means everything's got to drop. Well, hey, maybe U.S. stocks going to pull back. I don't think they would much, but I don't care because look what's happening, man. My portfolio went up today while everyone else is scared, right? Because gold commodities went up. And now, if I'm correct, European stocks will consolidate over the next couple of weeks and then turn up too, maybe in October or November, and start big moves, new bull markets. Okay, I don't think we're going to see, I don't know what the S&P 500 will do. My guess is it'll fall back down to the 50-day moving average, because when I look at charts all over the place, the 50-day moving average now looks like a logical support zone that we could easily see retested for markets all over the place, the S&P 500 and Europe too. Well, that's not a dramatic pullback. For example, let's take EWG. I don't think it's going to go to 18 at this point, no matter how worried people are saying stuff has to pull back, because they're looking at S&P 500 and thinking, oh, I don't think it can go up so much right now, so that means it's got to drop. Not necessarily. It can just not do much at all, right? And I think, when you see most bottom formations, if you read William O'Neill's stuff, they talk about cup and saucer formations, or if you look at reverse head and shoulders formations, usually what happens on that final right shoulder, or the end of that cup and saucer, whatever you want to call it, and you can go to Wikipedia or Google and type these things in and study them for yourself and get a better feel for things, and see lots of examples. Just type cup and shoulder IBD, right, and read articles about it, because I think that's basically what we're in the process of seeing in markets all over the place. But the point is, what happens on that final right shoulder, or the end of that cup and saucer, whatever you want to call it, is you don't really get a big pullback. You saw pullbacks here, you saw pullbacks here. Now we've had this nice rally. People are expecting this big pullback, but instead, what tends to happen is you just get a mere pause, a consolidation sideways phase without any giant drop back down to the recent lows. And if that's the case, and I think it's most likely right now, what will probably happen is these world markets will hit their 50-day moving averages sometime in September, October, with the 50-day moving average for EWG, for example, above 20, maybe at 20.5 or 21 even. What that means is at this point, there's probably not huge upside in these markets, but neither is there big downside. It's just a matter of time, not price, but time to digest this gain here from June for a consolidation phase of a couple weeks, 2 months maybe. It's time that's the most important factor. And once that time is completed, bam, these things will break out into new bull markets. So that's what I'm looking for. I'm not worried about giant pullbacks in the rest of the world. I don't really, frankly, care what happens in the United States anymore, because right now I'm not investing there. Because I think over the next 2 or 3 years, the upside's in gold and the upside's in world markets, and I want to be like roughly investing half-half in both. And I've got a nice position, and I plan on adding on to that position in a month or two, and basically having a lot of fun, just like I've had today over the next 2 or 3 years. But bottom line is, I'm looking for a pullback or a pause for the markets across the world to hit this 52 moving average. And I think once that happens, they'll break out, just as we saw gold break out today, just as we saw the CRB index break out today. Those two things, though, may just go higher from now without a pullback. In fact, I think that's very, very likely that we're going to actually see gold, stocks, commodities just do better than everything else for the next month or two, and really take people by surprise and enter bull markets. And the thing is, everyone's missing this right now, except you, except me, because we're not just looking at the S&P 500, we're not just looking at the NASDAQ, we're just not looking at the Dow. That's all they talk about on television. It's all 99% of the people are thinking about right now. But you got to look outside that to see what's really going on and where the real opportunities are, and to make the big money that I think's there over the next 2 or 3 years. So I just want to give you an update what I think is going to happen here. I want the main takeaway for you to be, look, gold broke out today, commodities broke out today, world markets will probably follow, but they're probably going to pause here and just go sideways without a really big pullback, without really big upside. It's just the time factor of digesting the recent gains in the sideways final phase of this bottom formation, and then they'll be geared to break out and follow gold stocks and everything else up into new bull markets. And we'll be watching this. I'll be updating you about this, and it's neat stuff. And I want you to be paying attention to this, because I think this is the stuff to be watching right now, and not S&P 500. So anyway, I'll be talking to you later.